Michael Burry, the trader who made his name by predicting the 2008 housing crisis, is trending once again. For those who saw the 2015 blockbuster The Big Short, Christian Bale's portrayal of Burry made him a household name, and now he's making headlines again for his bold economic predictions. In this video, we'll take a closer look at Burry's track record and see just how accurate his predictions have been since his famous call on the housing bubble. But first, a quick reminder, please give us a like and don't forget to subscribe to our channel. We all know about Burry's prediction of the 2008 housing bubble, but how many of his other predictions have held up? It's easy to get caught up in the drama of his early success, but we wanted to dive deeper to see if his more recent forecasts have been on target. Let's take a closer look. For those of you who haven't seen The Big Short asterisk, let's start with a quick refresher. Burry realized that housing prices were unsustainable and that they had already reached a point where they couldn't continue rising. By loosening the restrictions on mortgage qualifications, it was like adding more fuel to a fire that was already burning too hot. By expanding the pool of buyers to include subprime purchasers, people with no credit, no money, and no real ability to pay back their loans, demand for housing was artificially inflated, but the supply wasn't there to keep up. Prices were already so high that no one could afford them without the help of questionable lending practices. Burry famously shorted the housing market because he recognized that the extreme demand was unsustainable. But what most people didn't realize was that, despite how high housing prices were, they would inevitably fall. This was public knowledge, but most investors didn't see it coming. They thought the system was too big to fail. Burry's short positions, though risky, had a very logical basis. Burry also famously said that his short positions wouldn't immediately pay off. The foreclosure process takes time, and even if homeowners started defaulting, it would be months, even years, before the true extent of the damage became apparent. He was right. Even though many thought the market would implode overnight, Burry knew it would take time to unfold. His short bet on the subprime mortgage market eventually paid off, and when it did, it paid off in a big way. But that wasn't the end of Burry's predictions. After his success in the housing market, he went on to make several other bold calls that caught the attention of both Wall Street and the general public. Burry realized that after the financial crisis, the government had essentially put the economy on life support. The Federal Reserve dropped interest rates to nearly zero, and the government pumped billions of dollars into the economy to stimulate growth. But Burry saw this as a dangerous move. He believed that the world had become addicted to easy money and that this wouldn't lead to sustainable growth. He predicted that the economy would face much lower growth in the coming years and that we would enter an era of negative interest rates. This, Burry argued, would create a chaotic and toxic environment that would be difficult to escape. He was especially concerned about the federal government's approach to handling the economy. By adding debt at such a high rate, Burry saw a major risk in the system. He warned that the leverage on the Federal Reserve's balance sheet was dangerously high, and the absurdity of the situation baffled him. He thought the reckless spending would eventually lead to economic consequences, and that those consequences would come sooner rather than later. One of his most significant concerns was how this monetary policy would impact small businesses. Burry believed that interest rates near zero would restrict the cash flow of small and mid-sized businesses, preventing them from thriving. In his view, only the biggest companies in the S&P 500 would be able to thrive in this environment, while smaller businesses would struggle to keep up. This would further concentrate wealth in the hands of a few large corporations. Burry's predictions about the economy were shaped by his unique background in both medicine and economics. His perspective on the global economy is rooted in his understanding of how systems work. He often describes the economy as a complex organism, and he uses his medical background to analyze potential risks in the system. He believed that if there was ever a time for the government to step in and stimulate the economy, it was after the 2008 financial crisis. However, his skepticism about the government's ability to make the right decisions remained. Instead of investing in businesses that could boost long-term growth, the government seemed to be overinflating the economy by pumping money into the system. This reckless lending, in Burry's eyes, was setting up the world for a future crisis. One of Burry's more recent and controversial predictions was about inflation. He repeatedly pointed to the speculative bubbles he saw forming in the stock market, similar to the ones that led to the dot-com crash. He even tweeted a chart comparing today's stock market to the dot-com bubble, highlighting how stocks were skyrocketing to unsustainable levels. Burry's tweet drew attention, with many financial analysts acknowledging that his concerns were valid. In late 2021, Burry's prediction about inflation started to come to fruition. Jerome Powell, the chairman of the Federal Reserve, finally admitted that inflation wasn't just transitory, as many had originally hoped. Powell's acknowledgement confirmed what Burry had been saying all along, that inflation was a bigger issue than most were willing to admit. At this point, Burry's track record was gaining even more credibility. His warning about inflation was beginning to line up with the reality the world was facing. So, how accurate has Burry's recent track record been? In 2021, he made some major moves, including reducing his portfolio holdings from 22 positions to just 6. Among the stocks he kept were CVS, Lockheed Martin, and the NGO Group, a private prison company. By the second quarter of 2022, Burry tweeted again about the speculative bubble in crypto and meme stocks, calling out the overvaluation in these markets. His thesis was simple. All speculative investments were headed for a major crash, just as they have in 2008 and 2000. And he wasn't wrong. The crypto market and meme stocks both saw massive declines, which only added weight to Burry's earlier warnings. Burry's prediction for economic pain in the short term has been unfolding. Inflation projections for 2022 were supposed to be under 3%, but Burry pointed out that just because inflation had begun to slow down didn't mean we were out of the woods. His belief was that interest rate hikes would continue, and we would likely see unemployment pick up as a result. Burry's predictions about the bullwhip effect, how businesses react to inflationary pressures, have also been a key area of focus for him. He believes that inflation will remain more resilient than many are projecting, and the Federal Reserve will have to take aggressive measures to curb it. So, how accurate have Burry's predictions really been over the last 16 years? He absolutely nailed the housing market crash of 2008. However, since then, his calls have been a bit more mixed. His predictions about low economic growth, inflation, and the speculative bubbles in various markets seem to be on track, but his predictions have also been known for being a bit erratic at times. His tendency to make bold, sweeping declarations about the future can be off-putting to some, and he has been known to backtrack when his predictions don't materialize as expected. Nevertheless, Burry remains one of the most intriguing figures in the finance world, with his unique perspective on the global economy. Despite some of his more outlandish predictions, Burry has consistently shown that he has a deep understanding of economic systems and the risks they face. It's also worth noting that Burry doesn't hold on to his forecasts for long if they don't seem to be panning out. He's quick to adjust when necessary, which is one of the things that makes him a highly respected figure in the world of finance. In conclusion, Michael Burry's track record speaks for itself. He has made some incredibly accurate predictions over the years, particularly in relation to the housing market crash. While some of his more recent predictions are still unfolding, it's clear that his understanding of economic fundamentals gives him a unique perspective on global financial trends. If you're interested in following Burry's forecasts, it's important to pay attention to the way he reacts to changes in the market. His ability to adapt quickly is one of his strengths.